Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the 9 EMA with RSI Trading Strategy Workshop. Today, we're going to trade the 9 EMA with RSI confirmation. We've got a lot of folks in the trading room right now eagerly awaiting. We're going to do some live trading, and let's get right out to price action. Now, I haven't explained the strategy just yet, but I'm going to show you what the intentions are. U.S. dollar, Japanese yen, 1-minute chart. We were deep into oversold territory down here on the relative strength index. That was a signal for us to buy the market. And then right here, we were waiting for a break above our 9 EMA. That's our trigger. So we've got our signal. We know what we're looking for. The RSI tells us that. And then our trigger, the way that gets us into the market is when price closes above or below that 9 EMA following the RSI confirmation. This right here was an absolutely beautiful trade. We scaled in right around here. It was a little bit late, but only by about a pip or so. You can see your entry point would have been probably right down here at about 144.11, 144.12. We got in at 144.13, and then we just banged right up and got an easy 1-to-1 ratio. Stop loss was right down here beneath that prevalent swing low. That's huge. The swing low that corresponds with the RSI. I'm going to go into that in just a second. But that right there, nice 1-to-1 payoff. A lot of folks don't believe in 1-to-1 risk versus rewards. I do. I'm a big believer in them. I've been doing it for a long, long time. And that was a pretty darn good trade. Now, the beauty of this strategy, and that's a 1-minute chart, we've got several things brewing on the 5-minute chart. So I'm going to take any and all of your questions. Be sure to ask. I want to run through the strategy itself. We also had a little bit of a news item today that I want to cover. I'll do that towards the end of the stream and sort of give my opinion on where we're going with the United States economy. I think it's going to be an interesting Q2. We're in for an interesting slate of numbers here in the next 6 weeks. So pretty good stuff here. Dollar yen didn't quite set up for us on the 5. The 1 was good, but guess what is? Gold setting up on the 5-minute chart right there. And also the Euro USD, very, very close to getting that close. We're waiting eagerly in anticipation of potentially getting a short trade, maybe in the next 2.5 minutes, something like that. And I'm going to go ahead and break down exactly what we need to do to get in on that trade. So we got a lot of folks in the room. Lita, good to see you, Lita. Always a pleasure. Let's see, Tuku. Good to see you, Tuku. Welcome back. Let's see, Simon24, good to see you. Onini, good to see you. Greg Goforth from Southwest Oklahoma. It was either Boom or Sooner or Go Pokes. I wasn't sure. It was either Oklahoma or Oklahoma State, but definitely welcome one and all. If you have any questions at all, that's what these workshops are for. Ask the questions about the strategy. I will certainly get in there and tell you what I think it is. It's a very easy strategy. It's one of our most popular that we put out on our YouTube channel, the How to Trade Calm YouTube channel. So we definitely want to be aware that there are a million ways to trade. We've put a lot of strategies on that channel. This one that I'm going to show you is by far the most popular. It's got the most amount of views, the most amount of comments, and also the most amount of interaction with traders out there around the world. So welcome. All right, guys. Let's get it cracking. 9 EMA workshop. Here we go. This is sort of the thumbnail for the strategy. Just go to How to Trade Calm. Check out the video if you haven't already. Dave, F19, good to see you. Yeah, I'm doing pretty well. Not too bad. You guys remember to ask any questions. If there's a market that you want to look at, I'll be sure to do that towards the end of the stream, probably the last 5 minutes. I'll give you my news beat and also what to look for potentially tomorrow during core PCE, and then any markets that you guys want to break down. I'll use my Fibonacci's and my own personal approach to the markets. This is the 9 EMA trading strategy. Here we go. All right, the 9 EMA workshop. Today is what we're going to do is we're going to set up the 9 EMA on TradingView. That's relatively straightforward. Then we're going to execute some trades. It looks like we may get one in the Euro USD, although it's being stubborn right now, so we're going to have to wait another 5 minutes at least. And then we're going to use a little bit of Fibonacci entry. I'm going to brush on Fibonacci entry. I don't know that I'm going to get into it completely because that's a huge subject, but we did make another video on how to make your entry points a little bit better using Fibonacci retracements, and that's sort of my specialty, is trying to use those type of retracements to flip risk and reward in your favor. All right, relatively straightforward stuff though, guys. When we're talking 9 EMA, we're talking momentum. We want to understand what this strategy is all about, and it's all about momentum. That's it. If you're going to trade an EMA strategy, the idea is that you want to get in on the move. Now, this is going to be more of a scalping workshop, although we are going to look at some key time frames for you and a few things that I would recommend you do to be successful trading this strategy. Now, the first thing that I want to say about any strategy, especially if it's a scalping strategy, especially if it's a crossover strategy, or if it's an EMA strategy, the lower the time frame you go, the lower your success rate is going to be. That's just the way that it is, especially when you're working with moving averages. If you get down there to a 1-minute chart or a 15-second chart or a 30-second chart, whatever you want to do, all right, when you get down to that granularity, it's what we call it, granularity, you're going to get into more choppy markets. You just are. Market direction is almost impossible to gauge on a 5-second chart, I know guys that they trade 50 tick charts just because they love the action. They want to be in there all day. With what I do, I've made one trade today. And I didn't do really great on the management, and I only made a few bucks. I probably should have made a lot more on it, but that's okay. One trade today. Now, a lot of folks want to make 100 trades a day. If you're going to do that, you can use this type of strategy to make 100 trades a day, and you just dial down your time frames. But just remember this. If you go to a 1-minute chart or a 30-second chart or even a 5-minute chart, 5-minute chart, not so much, you're going to have to take a lot of trades. And when you take a lot of trades, you're going to have a lot of winners and a lot of losers. And that's just the way that it is. So understand that if you're going to be a true systemic trader, a systematic trader, essentially you could easily program this to be a black box system. You could. And what will dictate whether you're profitable or not is your stop losses and your profit targets. Now, I'm going to show you how to set those, how I do them. The most important thing we're going to work on today is our stop loss. Always know where that is. The rest of it will take care of itself. But if you're going to trade an EMA strategy, you've got to get in on moves. You've got to get moves. That's just the way that it is. And the way that you get moves is you know what to trade and when to trade. We're going to show you how to trade it. But remember, you want to trade an EMA, a 9 EMA strategy. You want to trade it when the market's active. Now, that's why we're going to incorporate the relative strength index. That's why we're going to use RSI to tell us when the market is in that state of disequilibrium, and we can get in there and we can trade it. Remember, if it has a pulse, we could kill it. If it's moving, we could trade it. We're looking for volatility. We want action. And if we get that action, we can make money. Now, I've had a lot of folks come out of the woodwork and criticize this strategy, and they said, Shane, you're leading people down the wrong path. You're lying to them. I'm not lying to you. Your success using this 9 EMA with RSI will be dependent on, number one, your ability to take a loss and move on to the next trade. Number two, your ability to understand when to do this. And number three, you got to stick in there and get your profit targets. You're going to build positive risk versus reward trades. You're going to have to stick with them until you get paid. That's it. That's all there is to it. If you can do those things, you can trade EMAs. Now, it's not for everybody. Not everybody can take these trades and stay in the market until they need to get there, until their targets are hit. They can't do it. And that's okay. We've got a million other ways to trade. We've got the opening range breakout strategy. We've got key levels, which there's not much interest. Nobody really wants to trade key levels. It's my bread and butter, has been for more than a decade. That's okay. But this is for those folks that love 9 EMAs. They love EMAs, and this isn't an EMA crossover. This is just a straight EMA strategy, and I think it could treat you very well, but you're going to have to bring a little bit of the secret sauce to it. I'm going to show you how I approach it, and we're going to go from there. All right, everybody, let's go ahead and get set up and see what we've got. All right, the first thing we want to do is just go ahead and set this up on TradingView. Now, I could get in there on MT5 and show you exactly how to do it. That's in the video. All right, so check the video out. You'll get to see it right away. Indicators right here. You click on indicators. You're going to go down to moving average right off the bat. You're going to go to exponential. We're working with an exponential moving average, and then right there you're going to have your settings. You're going to pull your settings up. Your inputs right there is going to be your length 9. Our source is going to be the close. The last price of the pricing bar is what we want to base our EMAs on. That's going to be the close. Don't worry about smoothing. Don't worry about any of this other stuff. 9 EMA close. Now, I always recommend getting the visibility going. I like to have it a little bit bigger there. So let's go ahead and just unclick and see what we've got. I like red, but you can feel free to use blue or purple or yellow or whatever you want. I like red, though, because red's sort of final and it gets our attention. Okay, so what are we going to do right now? We know we have an RSI. We have an RSI that I haven't explained yet, but we're going to get to it. We have an RSI that's in overbought territory. We have a potential selling opportunity right here in the Euro USD 5-minute chart. Is now a good time to be taking this trade? Absolutely. You're during the U.S. session. This has been an exceptionally active session on the Forex. We are fighting an intraday trend, but that's what our technicals are for. So what gets us into the market? RSI over 70 means we're overbought. We want to look to sell, okay? We want to sell a reversion back down into more normal times, a greater state equilibrium. What gets us into the market is a bar close beneath our 9 EMA. There it is. Boom, sell it. Okay, we just sold the market. You'll notice I used a market order. That's just to get us in and make sure that we have a trade execution. Now, the number one thing you have to remember, the number one thing that you have to do, you have to know where you get out. Now, we are fighting an uptrend here. This could be a tough trade for us to win. Where's our stop loss? This pronounced swing high is what I would recommend. And now, listen, you don't just put it 1 pip above. You're not up there about 141. You're not like, let's put it a couple pips. Let's put it right up there, maybe 142.7, something like that. What we don't want to have happen, and this has happened to us live streams on several occasions, is price has gone up, it's barely nipped our stop loss, and then it's come off hard. All right, I hate that. That's the worst way to lose, and maybe we'll lose that way here, or maybe we'll win. But we know where we have to get out. Now, we're fighting a trend, which isn't necessarily bad because we're using a mechanical approach. All right, we are completely mechanical right here. We're not worried about anything. We're not worried about the news cycle. I'm not thinking about what Trump's going to say next. I'm not thinking about Jay Powell. I have a technical setup right here on the Euro USD 5. What is my technical setup? RSI, Relative Strength Index, built by Wells Wilder Jr. back in, I believe, the late 70s or early 80s. This thing's as old as the hills, but it is reliable. All right, 70, anything over 70 on an RSI value means we want to sell. We're in overbought territory. Anything under 30 means we're in oversold territory and we want to buy the market. Okay, so right here, we're in overbought territory. We want to sell right on this swing high. Well, we can't sell right here. And the reason why we can't sell right here, number one, we're trending. Even though RSI is overbought, and theoretically we could take the short, you don't want to do that because we don't want to fight trends. We don't want to fight the trend. We don't want to fight the 5-minute trend. Now, this trade is fighting the intraday trend. No question about it. I won't deny that. But we have an ace in the hole. We closed beneath our 9 EMA. That tells us that maybe things are changing. Maybe things are changing. Overbought territory, we want to sell. There's our sell signal right beneath the 9 EMA. Now, the real question is this. Where do we put our profit target? Every good trade has 3 parts. You've got an entry point, a stop loss, and a profit target. If you don't have that, you don't have a trade. You don't have a trade. Now, we'll talk about leverage some other time. 1 to 3% of your account balance is what I recommend. I know you can't make much money doing that if you don't have much money, so I'm willing to look the other way. If you want to go 5% of your account balance, just make sure you don't lose 4 or 5 in a row, or else you could be in a world of hurt. Now, what do we want our profit target to be? There's many ways to do this. The 2 that I'm going to focus on is going to be a static risk versus reward. All right, we went short right there at 117.28, and right up there our stop loss at 117.42. What is that? It's about 14 pips. So if we're at 28 and our stop's at 42, we're going to have to draw blood somewhere right around 14 for us to get paid off at a 1-to-1. Now, I'm not saying that you have to use a 1-to-1. You can use a 1-to-2, maybe something like that. All right, there's another way to do it. Market structure. I tend to like market structure a little bit better. And that's when you're just targeting order blocks. You'd say, okay, there's an order block right here, a little bit of action right around 117.15-ish. Okay, that's not bad. Or we could be looking at the bottom of this bullish market structure that began back here really during the mid-session, about 9 a.m. my time, so about 11 a.m. Eastern. You could be doing that. You'd be searching for that. Or you could be just looking at this intraday low saying, well, maybe something like that, maybe 116.90. Or maybe I want to go for the moon. Maybe I want to go 116.75 and try to make a lot of money on this trade. I don't have a problem with any of it. What you've got to do, though, is if in fact you're going to be, this is what I would call a home run hitter. You're looking for 116.75. Okay, you're going to risk 14 ticks, 14 pips off the front side. You're going to be looking to make 25 plus 28. You're going to be looking at 56. So you're looking at roughly a 1-to-4 risk versus reward. Now, I've watched a lot of traders do this type of stuff where they get into trades like this technically, and they're looking to get the move. They want the 1-to-4 because they know they only have to hit these things about 25% of the time to break even, 30% of the time to have a nice profit. I don't do that. I like 1-to-1s. Very easy. 50-50, right? Well, all I'm looking to do is establish a 65 or 70% success rate on a 1-to-1 risk versus reward. That means I have 20% baked into the cake. That means that's my edge, 20%. And then it's just a matter of getting as much money as I can and betting as much money as I can, apply my 20% to my total handle, my total turnover, and then we walk away. Then we go buy cars and things. That's the way that I approach it. Now, you don't have to do that. Let's say you're in a prop account. Let's say you're in a contest and you say, all right, this trade has potential. I feel like we may have picked the top of the market. Maybe you let this thing roll for a few days looking for your 1-to-4. Just remember that if you do things like that, you're using a 5-minute chart to potentially take a swing trade. Is that a good idea? Depends. Maybe you timed it perfectly. Maybe our tools helped you time it perfectly. Something to think about there. All right, let's let this simmer. I love this first one. I'm going to go ahead and I'm going to do what I do best, and that's just take profits, probably right around, 14? Somewhere in there, 14 or 13. That's what I'm going to look to do here. I feel like we've got a pretty good opportunity to do that. And you'll notice that this leverage, these are demo dollars. Clearly, you're going to probably have to trade a little bit bigger than that, especially if you're on a prop account or if you want to make any real money in this game. But this type of a strategy, we risk 15 pips, something like that. I believe it was no, it's not. It's 14 pips. So 14 or something like that. We could definitely be playing for at least $10 or $20 a pip and not be too out of line. That's not a bad way to do business. So I'm watching that closely. We'll see how this one pans out. Now, what I didn't explain here is the relative strength index, and we've got to cover that. The relative strength is the RSI. All right, it was developed by Wells Wilder Jr. back in the 70s or 80s. Who really cares? He was a famous market technician. I read his books and looked into really what he had to say on a lot of different things. I thought his work on the average true range, his ATR, was a little more robust. But this relative strength index is interesting because what it is it's just a way that it frames price. That's it. You have an area where you've broken out and you're in an area of disequilibrium. And then you've got another area where you're in bearish disequilibrium. And the idea is that price is always going to typically move back to that mean. I like that because from my experience, that's exactly what happened. Price runs and then it rotates. Price buyers and sellers knock heads. One of them wins. And then we start reevaluating what something's worth. We've watched that all week long with the Trump, Israel, Iran news cycle. It's been an absolute huge teachable moment if you've been in the market this week. Relative strength index can tell us maybe when things aren't so obvious that prices are out of whack, and that's exactly what we saw in this Euro USD. Let's go ahead and set up this RSI and see exactly what we've got cooking here. Now, as far as how you do this, I'm just going to go ahead and show you. You're going to go up to indicators here, and you're going to go to RSI. Just right down to relative strength index. And this is on TradingView. RSI is available on MT5 as well. So it's a public domain indicator. It's absolutely free to use. You don't have to buy anything. Relative strength index, you just go ahead and give it a click. And I like to bring it up as a window pane, a separate window. Some folks love the RSI as being right as a chart overlay. I don't like that. It's confusing to me. I like my charts as clean and as easy as they possibly can be. That's what I like. And that doesn't get much more clean than that or easier. Right now, what are we printing? 127 or 117.21. We still have some work to do on this trade before we get paid. We really do. Down here, your RSI. What we need to look at is your settings. I get this question almost every one of these workshops, so I'm going to go ahead and cover it. Shane, what are your inputs on the RSI? There's no secrets here. These are the factory settings. So I don't know if anybody's a hunter out there, but when you got your rifle and you go in and you buy like a box out of the store instead of reloading your own and loading your own ammunition where you can really dial it in and do exactly what you want with the load. You go buy factory loads, and those are just straight from the factory, and they're just sort of standard issue. We use standard issue RSI. Couple of reasons. Number one, simple is always better. I love simple. And I'm not about to get into the RSI and try to figure out what Wells Wilder was thinking exactly and then try to apply it and fine-tune it in my own way. If you guys are capable of that type of stuff, God bless you. Go for it. I'm not going to tell you not to. Hey, listen, if you want to get out the wrench and the torque wrench and the sockets and you want to make that engine better, you go right ahead. For me, I don't know enough about it. And I'm going to just leave it as it is because I love simple. Simple's better. These are the factory settings. RSI length is 14. Sources close. Smoothing, don't worry about it. Just leave it. You don't need to do any of it. 14 is your length. That's our periodicity. 14 price bars based on the close. You guys are starting to understand what it is now? It's just an average. It's an envelope for pricing. 70 to the top side is huge. 70 means what? That's where the rubber hits the road. Any RSI value over 70 means that there's too much buying and we've got to come down at some point. 30 to the downside. Below 30 means there's too much selling and there's going to be some buyers step up to the plate and drive the price right back to 50. It's relatively simple. I love simple. Simple's the best. Okay. Shane, why don't I just sell when it goes over 70? Because if price is over 70, that means you're in a trend. And the biggest problem with trends is they don't just stop. That's where our 9 EMA comes in. That's our trigger. We know the conditions are ripe. We get in there when the RSI tells us to. Our trigger is going to be our 9 EMA. It's that simple. So this trade's doing relatively decent. Now we're down around 50. I would expect this to stagnate. The beauty of this is we've got a pretty good opportunity to hit pay dirt at least right here. We just got to wait and see exactly how this one pans out. That's the RSI. Now, as far as should you be using the RSI on everything religiously with any strategy? No, you don't have to. Do you need, let's say this. Let's say we're looking at gold, and this was the trade that I really wanted to make. I wanted to try to catch the top of this gold market. I've got some gold futures trades that I want to sell right up around 33.50, and right now we're printing about 47, so I might get those later today, maybe not. But this is the one that I really wanted on the 5-minute. Now, do you need RSI confirmation on, say, a 4-hour chart? Doesn't hurt. I mean, right there. Are we in oversold territory? Somewhere down in there. What's the low? 28.77. So you'd have been in oversold territory. Where would your buy have been? Is that your buy? On a 4-hour chart, what's your close? Your close on that bar is going to be 33.34. What's the 9 EMA? 33.98. I highly recommend not taking trades like that. Wait for it to be obvious. Now, if you're on a 5-minute or a 1-minute chart and you're, just a little bit above that 9 EMA right there, then take the trade. I don't care. You're going to take so many trades, you're going to get sick of taking trades. But if you're on a 4-hour chart, well, take a look at where your risk is theoretically going to be. It's going to be down here beneath this swing low. So you're going to be looking at a stop loss somewhere down around 32.94, and your bid's going to be somewhere around 33.34. That's $40 roughly. Okay, $40. We're just going to dial our leverage down so we have some staying power to hold it. Do you take that trade? Boy, I wouldn't. If you want to count that as a crossover, technically it is, but man, it's close. It's what I call right on the chalk. I love obvious. I love easy. Make it easy. God, give me an easy business. Give me a boring business. I don't want to sit here and go, oh, is it in? Is it in and out? You guys watch football or not, American football, when you're doing instant replay reviews and the guy's trying to get his feet in on the sideline and everybody's wondering if it's a complete pass or not? Who cares? I say run the route a little bit inside, get both feet down and make it easy. Let's make it easy. So right here, if you went right there, that's fine. You took a draw and you're right back where you started from. You probably should have been looking to go long right here. And by waiting for that to actually prove itself above your 9 EMA, you saved yourself some pain. Now, there's another way. I'm not going to go into this today because it takes too long. But realistically, we made another video about using Fibonacci retracements for your entry points. And it's a way that you can really swing risk versus reward in your favor. And essentially what we do is we wait for the cross under, and then we wait for a pullback or a crossover and a pullback, and then we look to get in. Well, this would have worked beautifully on this 4-hour gold chart. Coming off of this low, you would have went right up here. You figure, okay, there's your close above it. And it did close above it. It did. It's just not very far, and it's not obvious. There's your pullback right to 62%. You could have bought 38% or 62%. And if you bought down here at the back end of that golden zone, now you're weighing the money. Now you're $24 in the money, and life's pretty good. The other thing you've done is you've made sure that you flip the risk versus reward in your favor. Stop loss is going to be beneath this swing low, and look at that. So the real question becomes, do you want to use all these tools to trade it? And I would say on a 4-hour chart, I'm not sure that you need any of it. I mean, 4 hours is a long time. That's a long duration chart. These will be swing trades. If you passed on that and you went long there, do you really even need the RSI? On a 4-hour chart, I don't believe so. Let's take a good look at another one. Let's take a look at another safe haven. USD, CHF, Swissy. Love the Swissy. Love trading the Swissy. And when the Swissy trends, it's pretty good stuff. Now, what would have happened in here on the 4-hour? It depends on when you started your trading day. I mean, you can see, guys, that you're going to catch these moves. But the problem you run into, especially on some of these Forex pairs, on these long time frames, is you're going to get a period of this where it's just like, oh man, it's chop city. Okay, that's great. But if you keep executing these trades, essentially, I mean, if you're going to be in the market all the time, you're either going to be long or short without any confirmation. That right there, you're going to get that move. And then guess what? Then you're going to get the bounce back. And then guess what? Then you're going to get the big sell. So you've got to keep everything within perspective, especially when you back off to, say, a 4-hour chart, or how about a daily chart? I mean, a lot of folks, pretty much everybody ignores daily charts. Here's a daily. You know, it depends on when you started, but you're in the market for these big moves. I mean, you're cutting yourself off right here. Let's say you're long, you're stopped out here, then you're going to be looking to go short there. You're getting these moves. Now, do you need an RSI confirmation on a daily chart? Well, I mean, if you want to, right there, oversold territory. So right in here, bang, that would have been your buy. You got a pretty good move, but now it's gone against you. Longer time frames, 4 hours and dailies, I would steer clear of the RSI. But if I was on short time frames and I was feeling pretty good about myself trading on a short time frame, 5-minute chart, 1-minute chart, then that's exactly what I would be doing. I would be using RSI as confirmation. All right, guys, I'm way behind on the live chat. I just wanted to get a couple of those points across. Let me see, Euro NZD. Yeah, I'll take a few questions now since we've sort of covered it. That's all there is to it, so feel free to take it and run with it. Rise and Thrive, good to see you. Lebo, good to see you. Rise and Thrive. So we're currently on a sell. Yeah, we were on a sell on that Euro USD. Jonathan Ross, what's up? What's up, Jonathan? How you doing? Let me see, Eli. It's got to make sense. That's what I say. If you're picking any type of strategy, it's got to make sense. It's got to be easy and it's got to make sense. Daniel, good to see you. Daniel, Eli. Daily is where I start. Absolutely. I start on the monthly, believe it or not. I go monthly, weekly, daily. All right, we had a question there. I'm going to just go ahead and cover a few of the fundamentals of the day. I think that pretty much shows you guys exactly how to trade that 9 EMA. If you have any questions at all, head on over to How to Trade. Send me a private message. I'll be sure to get back to you. Let's see what we've got here. Well, these are my charts, and this is sort of what I'm looking at all day. But don't get confused by that. Euro NZD. It's going to be a tough one. I'm going to be honest with you. Typically, this thing rotates. Got a little bit of movement there on the 30-minute. This is how I would do it. Well, I wouldn't do that. Yeah, let's go ahead and exit out of that. Nah, I don't want to create a new layout either. Internet's overwhelmed here today. I don't know if we're getting cyber attacked or what. All right, we want Euro, Kiwi. All right, the first thing that I would be doing is I like to work back to front. I always step back from 10,000 feet because I always want to know where my macro levels are. Okay, so right here, monthly chart, the first thing that I'm going to do is run a Fibonacci from this spike low right here to this extreme spike high right here. All right, in my view, we've already missed the greatest trade probably you've had in the last couple months, 62% back into the Fibonacci golden zone. That's fantastic stuff. 188.83, something like that. That's a banger. That's a big-time move. Now we've broken above last month's high. Are we bullish or bearish right now? You've got to be a little bit bullish, but don't get carried away because we sort of are trading sideways still within April's range. All right, so I'd be dialing down my time frames now. I go down to a weekly. I'd say, okay, what can we do weekly? Interesting. I mean, just very, very choppy. Then we sort of broke out. I mean, this is sort of showing me that a modest bullish bias is warranted. 192.35-ish, somewhere down in there. Not bad. About 80 pips off. That would be a pretty darn good kill. It's what I would call a kill zone. You'd want to make that trade if you could get it. Let's go to a daily. And you see, I mean, we don't make this stuff up here, guys. We really don't. There was our weekly chart. There was your pullback 2 days ago. You bounced right off of 38%. That's a pretty valid demand zone right there, 38%, 192.32-ish. That's not bad. Now, if you want to see about, I don't want to get too far out in the tall grass with my own strategy, but this is what I like to do. I'm looking for convergence. I'm looking for converging indicators or what I call commonality. All right, commonality is where we get a couple of these levels to line up. That's an interesting zone. 192.57 and 192.32. It's not bad. Not bad at all. Something to think about there. If you get a pullback down in that zone, I probably would be a bidder from there. As far as news events go, I'm not necessarily certain what's coming the Kiwis' way or the Euro's way this week. I don't think much. I think it was a relatively quiet news week. So that's a good one there. All right, let me see. Ronan, hello from Israel. Good to see you. All right. All right, guys, let's go ahead and close with just a few fundamentals that I want to cover because I got a big shout-out going to the folks that have been watching my streams are sort of tired of me giving shout-outs, but I'll do some. I love giving shout-outs. Give a big shout-out to Melinda, who was awfully hard on me when I started talking recession a while back. Today, the Q1 GDP numbers came in, and they are final, negative 0.5%. That was beneath negative 0.2% expected and well beneath Q4 last year, 2.4%. What that means is you're only one negative quarter away from being in a recession. And I think that you're going to see a recession. You're going to see a recession. And it could be the shortest recession in history. It really could be. I don't think it's going to be a deep one. But the way that the tariffs have impacted things, the way that just sentiment has been up and down and inflation's been persistent, more than likely we're going to post a negative Q2, and that's going to be one of those things that's going to drag us into an official recession. And all the media that doesn't like Trump, they're going to love that headline. So get ready for it. I think it's coming. Hopefully Melinda comes back around and apologizes, issues a blanket apology to me and all the other viewers for flying off the handle saying that recession. I'm telling you right now that it's very possible. Now, I don't know that the economy is any weaker now than it was last year at this time. I don't believe that for a minute. I think that you're building the foundation for a strong U.S. economy, but there's going to be a bump in the road, and I think it's going to be the big R word, the dreaded R word. So get ready for that. You heard it here first. Does Jay Powell cut interest rates to fight the recession? We'll talk more about interest rates tomorrow after the big announcements on core PCE. But this was sort of for GDP. This was a pretty big one. Last thing I'm going to say is this: GDP price index. That's an inflation multiplier. 3.8% over 3.7 expected, and way up. And I mean way up from the previous quarter. That means that inflation is strong, and that means growth is down. So look out. All right, let me see. Ronan, what is the best indicator for the 9 EMA? Well, I paired it with the RSI, Relative Strength Index, for confirmation. So go ahead and check out earlier in the stream. I'll show you exactly how to set it all up and do it. I like the RSI because it is easy. It is easy. That is for sure. It's definitely very simple. Above 70, you sell. Below 30, you buy. As far as time frames go, I will get this question. If you want to scalp Forex pairs intraday basis, you can get away probably with the 1 and the 5 minute chart, but if you're going to do it, you do it during that London US overlap. You want to be in there when there's the most volatility and the most liquidity. You don't want to be trading a 5 minute chart or a 1 minute chart during that US afternoon when all the participation leaves and the currency prices just sort of sit there. You don't want to be doing that then. You'll get into trouble doing that. So be very careful exactly when you apply the strategy. Now, if you want to take the guesswork out of it, go to a 4-hour chart for Forex pairs. That'll take the guesswork out of it. Go to a daily chart and wait for pullbacks to get your risk versus reward where it needs to be. You can do that as well. 30-minute chart. I love the 30-minute chart. Let's say you wanted to trade the Great Britain Pound USD or the Great Britain Pound Japanese Yen. Why not just start right on the London Open? Use a 30-minute chart. It's going to take a while for things to set up, but when they do, you may get that trade down during that U.S. London overlap. So use your head. And remember, if you're going to get into the 30-second charts, you need to be trading something that is incredibly volatile, something like E-mini NASDAQ futures. I've done that on 15-second charts. That's a lot of fun. We typically either make a bunch of money or lose a bunch of money. All right, one last question. I'm going to sign off. Greg, go forth. All right, let me see. Are the 9 and the 920 for different market conditions? That's a great point. The 920, it's a great question. For me, I see the 920 as being best suited as a position trade. I love it on daily stocks, daily stock market, just picking individual stocks on the daily time frame. Love it. Can you scalp with the 920? Of course you can. You could take it down to a 1 minute chart or a 5 minute chart. You can certainly do that. I don't have a problem with that. I don't think that you need the 20 on those real short time frames, though. I think I would go with just the 9 with the RSI confirmation. Now, if you want to make extra certain, because think about it, what is the 20 and the 920? The 20 is giving you a broader picture of what price action's doing. It's telling you whether the market's overtly bearish or bullish. And all the 9 is when the 9 crosses over the 20, we're saying, okay, the winds are shifting. Now, if you want to be real safe and you want to say, Shane, this 9 EMA stuff is okay, I like it, but it seems really risky. You're not wrong. It is, especially when we're looking at 1 and 5 minute charts. But if you want that extra layer of insulation right here, Euro USD, this is our trade. Let's get back to it. Let's add the 20. So if we let's put it all together then. RSI oversold. We love that area as our, or excuse me, overbought. It's overbought. I always get that mixed up. It's an overbought territory. We love that area as our stop loss. We love that swing high. We say, okay, now with the 9 EMA, we're already short. We're aggressive. We're already short. What do you think is going to happen here, though? The 9 is coming down on the 20. This crossover here, that can get us short too. It's just a question of how aggressive you want to be. For me, if I'm trading a 5-minute chart or a 1-minute chart, I'm just going to trade the 9 EMA with RSI. If I'm using my head and I'm going, you know, Shane, I want to make a score this week. I want to score. And I go to, say, a daily. I mean, you can't argue with these dailies. Sure, that's a fake out right there to the top, but you're getting in on, I mean, you're not missing the big moves. You're not. You're in there. Let's go to a 4-hour chart here. 920 crossover on a 4. Right there. There's a crossover. Bang, crossover, cross under, and then you got it on the big dump, and now what do you have? Yeah, you got the RSI down there in oversold territory, so you're looking for a bid. Personally, I don't think you need the RSI on a 4-hour chart with a 920. The 20 is plenty enough confirmation for you. Great question, Greg. Great question. All right, guys, I'm out. I'm going to go ahead and sign off. I'm going to go back and bang my head against this gold futures market at least for another hour or so, and then I'm done for the day. It's been a pretty good couple of weeks. I'm not going to lie. I've sort of had a grin on my face since last Tuesday night, so it's been pretty good. What we are seeing, though, is challenging market conditions are definitely rearing their heads, and the reason why is all the chaos is seemingly gone. Boy, last week at this time, it was crazy. We're on the verge of World War III, and then over the weekend, we thought World War III started, and now all of a sudden World War III is off, and everybody wants to throw their bombs down and go home, which I think is a great thing. Get to the negotiating table. Peace is good. Peace sells. It's the old Megadeth song. Peace sells, but nobody's buying. Peace sells. Let's do it. All right, everybody, I'm going to sign off. Absolutely, Lita, you're 100% welcome. Thank you, Dave, Greg, Eli, everybody out there, thank you. You have a fantastic trading day. If you need anything at all, head on over to howtotrade.com. Click on my picture, send me a message. I've been getting a lot of them lately, so thanks for everybody. And I do my best to answer those within short order. There will be a trade idea out, but it's coming out later today. I want to see exactly where these markets close before we sort of talk about PCE and what we need to be ready for. Remember, tomorrow, trading PCE price index fallout. That's going to be early. That's going to be 30 minutes after the U.S. Open, and we're going to get in here and maybe we'll put some of these strategies to good use and see if we can do a little high-impact scalping and make a few bucks. Right now, I have a date with gold, so I got to get going. All right, everybody, you have a fantastic trading day. Trade the action well, and we'll talk soon. See you.